The Office of National Statistics in London released data today showing UK jobless claims fell the most in almost 2 years in August. But with unemployment data slightly up, what does this mean for the UK economy? I'm joined down the line today by George Buckley, Chief UK Economist at Deutsche Bank, to discuss the reasons behind this positive trend and whether or not he thinks it is set to continue. Mr. Buckley, thank you for joining me. Britain's job market has been surprisingly resilient for the last few quarters. Was the result today what you were expecting?
I think it's worth bearing in mind that, the unemployment rate has risen slightly, but the detail of the other activity indices and indicators in this survey have been incredibly resilient. I mean, we have the third strongest increase in employment over the last 30 years. Which suggests that we are still seeing people getting jobs despite the fact that the economy is very weak. Now, there's a few conclusions you can draw from that, but it does to me look like underlying productivity, is weaker than it used to be. You need more people to produce the same output as you used to. It could be also the case that it's a bit cyclical as well, that the weakening in GDP at the start of this year is now, it will eventually feed into a rise in joblessness and lower employment, but it hasn't done yet. And it hasn't done over the past 4 years. We've seen very strong employment, resilient employment in the face of weak growth. It has huge implications for what the Bank of England does, because if you think it's a deterioration in underlying productivity, then your supply capacity isn't growing as quickly as you thought it would be. And if supply capacity isn't growing as quickly, then it means that your output gap isn't as sizable, and in turn that means that the downward pull on inflation isn't as big. The Bank of England has to be very careful in sanctioning more QE in that case.
Did any results in the data released today show signs of weakness for the UK as the economy remains in recession?
Not really. I mean, we saw a small rise in the unemployment rate, but the other activity indicators were very strong. Again, we saw a very sizable increase in employment. We've seen the claimant count fall yet again. The claimant count rate is down. We are seeing some weakness in earnings. They're still not really picking up that strongly. 1.5% is fairly low. It's obviously lower than the rate of inflation, which means that people's real incomes or wages are still being eroded. But I mean, that's part of the story, that you are seeing higher employment because people are willing to work for a lower real wage. In other words, they're quite happy to take pay cuts in real terms in order to keep their jobs.
Recent employment trends in the UK have been far better than expected, with last month's figures from the Office of National Statistics showing unemployment falling to its lowest level for a year after a big jump in the number of people in work. Do you feel the Olympics is solely responsible for this jump in figures, or are there other factors affecting it?
I don't think it's just the Olympics. I mean, I think that's probably helped in part. Certainly as of last month, we hadn't seen a huge pickup in part-time. A lot of it had been full-time, and that is not necessarily what you would have expected, for example, given that the nature of some of these jobs is temporary in the Olympics.
The country is suffering its longest double-dip recession since the 1950s, with GDP falling 0.5% between April and June. How, over these figures, have we seen a positive trend for employment, and do you expect this trend to continue?
I think it's this is not something which has happened just over recent months. We have even during the height of the downturn, yes, employment did fall, unemployment did rise, but nowhere near as much as the change we saw, for example, back in the 1980s or even the 1990s. Relative to the scale of decline of GDP, this has been a relatively benign outcome for the labour market. We haven't seen anything which looks as bad as we saw in the 1980s or the 1990s. So therefore, I think it probably can continue, maybe not at the rates that we're seeing right now, but certainly the labour market tends to respond with a lag of about 6 months to changes in the economy. And of course, at the start of this year, end of last year, we did see some fairly weak GDP numbers. Even right now, the underlying rate of GDP is not very strong. That could show up in higher unemployment later in the year and lower employment, but generally speaking, this has been a phenomenon which has been quite long-lasting. We've seen employment very strong and GDP very weak over the entirety of the crisis and the recovery phase.
Thank you, Mr. Buckley, for your insights and predictions. Click back to the Dukascopy TV website tomorrow and I'll be taking an in-depth look into Canada's housing market. Until then, take care.